What's up, traders? So, welcome to another weekly market analysis. I'm hoping that your January trading month has been perfect. So, this is my first recording to make for the year 2026. Reason being, I've not been able to do, a recording for January. However, we've had, I think, two live trading sessions live on TikTok, and hoping moving forward we should have a weekly market analysis of everything I'll be trading for the year 2026. So I would like us to jump into the economic calendar just to check on what we'll be expecting this coming week as the month of February opens. So we have a pretty much of red folders for this upcoming week. I think top of the week is that on Wednesday we're gonna have CPI, the Euro CPI, and then on Thursday we also have a couple of news that I mean the euro that will be affecting the euro, GBP, and USD pairs. And then on Friday is gonna be a hallmark of the week because we're gonna have the first NFP of the year 2026. So non-farm payroll, which is a very high impact news. So having that, having known that about the economic calendar, then we can be able to move forward to the weekly market analysis. Now, before we even jump into the weekly market analysis, I would like also to give just a scope of how I trade and how I approach the market. So basically I'm a supply and demand trader, and I'm looking to get into buy positions anytime the market comes into a demand zone, and I also look forward to short the market anytime that we come to a supply zone. So this is just a rough a sketch of what I visualize into the market. So it's not my first time actually doing this, but if you just came across my video the first time, then I'll be taking you through what is on this sketch. So basically the market moves making higher highs and higher lows like that. So, and anytime we have a break of this high swing, then that is what we call the BOS, or what we call the break of structure. Now when the market pulls back, so we have an impulse move and the pullback. So the impulse is in the line with the trend, then the pullback is a correctional phase of the market. Now once we have the correctional phase, we also have now at the bottom of that low, that is where we have an aggressive push to the on the impulse side. Therefore the market will always leave a demand zone like this, the way I have marked. Now again we have the impulse, then correction. So the impulse is in line with the trend. So if it's an uptrend, so you can see the move going up. So the correction. Now the market will always in most times pull back to the areas of demand, so when making higher highs and higher lows, and that is illustrated as per the sketch below. Now anytime that we have this break of the swing, then it means, or the high, then it means that we're having the break of structure. Now as a swing trader, or rather as a trend trader, you want to participate into the market when we are having the market making this move, which is the impulse move, not the corrective move, because the corrective move is unpredictable, sometimes slow, and also choppy. So you always want to participate when the market is making this impulse move. Now how do you or where should be your entry points? Your entry point should be at these swing lows here, so that you can be able to ride the move up at least until here, or even beyond if the market accepts to move beyond, or if you're patient enough to hold. So at these circles that I have marked here, this should be your areas that you will be looking to get into buy positions. Now the question comes in here: how do you get into these buy positions? So you have to use, or you have to have a very good timing of the market. Now Now, these areas again that I have marked, the demand zone, I always want to be from the higher time frame. So these are areas which will be from the higher time frame. Probably it's either the daily or the H4. Now, so once we have the daily or H4 or higher time frame zones, then it means that when the price is pulling back to these sessions, this is a lower time frame, let's say M15, the market will be making lower highs and lower lows. Remember, even during the impulse phase here, we have a mini trend on M15, or rather on the lower time frame, which is making higher highs and higher lows, and we have also a mini trend here. So you want to pay attention when the market is pulling back to your point of interest, in this case, which is the demand level. So as soon as you see the market is pulling back to your area of interest or point of interest, whatever you want to call it, that is when you pay attention to the market. That is when you are interested in that to trade that particular asset. Now, as the market comes down to the area of interest, once we touch the point of interest, now we have this kind of a pattern. So you'll be looking for this kind of a pattern, which is actually the confirmation kind of setup that I always look out for. So you want to see the trend on the lower time frame, the structure on the lower time frame turning from downtrend to uptrend. And how do you know that this is happening? So the market will do like this. So you will have a break of the last lower high, then the market pulling back, then this having the market creating a lower time frame demand zone. This should be your entry point, and this is what has happened here. So we have the market making lower highs and lower lows. So this is the last so let me mark it in a smarter way. This is the last. So of course on this side we are also having break of structure, another break of structure, then on the last structure here we have the last lower high. That is when we have the change of character. So as soon as we have the change of character, now we already know that the market is turning inside out, or the market structure, or rather the market trend, the trend now, the pullback is aligning with the major direction of the market, which generally the market is an uptrend. So you want to see this change of state of the market here. That is when you'll be participating into the market, and you want to get into an entry on the lower time frame demand that will be created, because once the market gives this break of change of character here, we usually have a displacement, and you'll be entering on the newly created lower time frame demand, and you will be riding this move until the highest point of the swing, or the origin of this one. So this is for the uptrend, and again this is an illustration for the downtrend. So I'm hoping that this is clear. So as the market is moving in a downtrend, the market is making lower highs and lower lows. Of course, I've already said that once the market is pushing down vigorously, then the market will the market movers or the big money will create the supply zones here, and that is the point that you want to see price coming back to. And once the price has come to that particular location, point of interest, that is when you want to pay attention most to the price, so that once this lower time frame trend is changing from up, this mini trend is changing from an uptrend to a downtrend, then that is when you want to participate. So for instance here, once we have the break of this one, this signifies the change of character. So once we have this break here, so you'll be looking to trade again on the lower time frame demand. So your entry point should be here, stop loss just above the zone, then your take profit should be on the next on the origin of this move, or the next key level. So this should be your entry. So just to let you know that is my model of trading, very simple and straightforward. Of course, I have some other checklists that are involved in this setup, so which we can explore in later videos. Now let's jump into the weekly market analysis. Now from the daily time frame on the dollar index, this is the dollar index, and of course the dollar index is an index that shows the strength of the dollar against other pairs. Now this is what I was anticipating for last week. We have this demand zone over here. So we have this demand zone over here. These are daily demand zone, but price actually broke out of this, violated this demand zone. So it therefore means that we should be looking for lower prices, especially now that price violated that daily demand zone. So however, last week we closed very bullish, looking at the last daily candlestick. Now price is ideally bearish actually, because as you can see, once we broke out of this place, now this is a break of structure. Now what we are having right now is the price is bearish, and dollar index has actually been quite bearish for a while now. Last week we closed bullish, and looking from the daily time frame, the areas that the market might be pulling back to is this might be one area of interest that you might be looking to trade from, or rather watching for the dollar index. Of course, once you are watching the dollar index, then you can be able to trade the other pairs. So and for our time frame, also the market might be reacting on this particular zone here. However, with the close of last week, there is no really signal to show that this price level might hold. So that is why I'm anticipating that if at all the market does not hold, if at all this supply zone does not hold, then it means we might see the market breaking this level, having a pullback, then to continue here before we can get a move to push down, because the price is still in a downtrend. So I think those are two key areas that you should be looking for. Now let's look at gold. So gold has been overall very bullish, but last week was a shocker because gold liquidated so many people who are actually taking their buy positions. So looking at gold from the daily time frame, we see price closed very bearish. Now what would be the last point that gold would drop to, if at all the drop would continue? So if at all we see gold dropping, maybe the area of interest that will be interested in getting into positions for buys on gold would be this one. So this would be an interesting level that you could look for buys on gold. Otherwise, I don't think price will see any bullish momentum on this level, at least on this zone here. So expect the price for gold to continue dropping until the mentioned price zone here. Once we get to this point, of course, that is when you want to go to the lower time frame, as I have already illustrated to you. So you'll be looking for this kind of setup, and this should be your sign to buy gold going up, if at all this demand zone holds the price. Now let's look at the AUD USD. So AUD USD, AUD USD. So AUD USD has been bullish as well. So since of course the dollar index has been bearish. So if you can see here, we had the break of structure on the daily time frame. We had another break of structure here going up, Now price left a very good demand zone from this point on, and if at all we will be pulling back, expect this to be a point where you might see reaction on on AUD USD. Also on the 4-hour time frame, I think we have a we have a small demand zone here that might also influence the price. So this would be an immediate price point that you would want to consider as the market opens on tomorrow, that is on Sunday. So if at all this demand zone is able to hold the price, then it means this is what you're going to be looking for on the lower time frame, so to ride the price up. So this would be an ideal setup, and basically this is actually a signature setup that I always trade in the day in day out. So this is what you'll be looking for, at least risk reward ratio of 1:4.95. so remember, we have this some little break of structure here because the market was so much overstretched, and you know that's why you can see a very minimal, it's a minimal break of structure until you go to the 1 hour time frame. That is when actually you can be able to visualize it better. So this is a break of structure. Now we had actually last week, as the week was ending, I was looking, I was buying AUD USD. I was anticipating for a buy from this level, but it was not possible. However, actually I got into a position where did I get into that position? Oh yes, I think I got into a position here. Yes I did. It was a buy position because the market was very bullish, so I was still looking for buys. So this was my position point here. So however, it was M15 demand zone, which I actually sent into the group. So my entry was around was based on the entry was around here, and I was looking for to target this level over here, but price did not reach there. So actually I was topped out on that particular setup with this move down on this side here. So now that we had that move on AUD USD, what I'm anticipating for is that if at all this demand zone is gonna hold, then it means price is gonna still continue to push up. But overall, if we do not, if price is not able to hold on to this level, then it means we might see a break of this demand zone, a pullback before price pushing lower, and then price reacting on these major demand zone on this level. So you can anticipate for any of the two. So because as a trader, your work is not to predict the market, your work is actually to watch what the market is doing, then taking action. Now for Euro USD has also been very bullish lately. So we've been looking for buy setups even for the month of January. So however, last week we closed very bearish. You can see this bearish candlestick over here, very strong bearish candlestick. So I expect this bearish momentum to continue, but not for long. So actually what I'm seeing right now is that the price has already arrived at a key daily support zone. Price violated this as it was going up, and then now it might be acting as a support zone. So however, price has already broken down on it. So now what I am anticipating for Euro USD is that we have two price levels that might actually hold on to price. So we have a break of structure on this level here, so meaning that this would be a point of interest for Euro USD. So if at all this level is able to hold the price, then it means and we are actually reacting at a point of demand right now. Price is reacting on an area of demand. So if at all this demand zone is able to hold the price, then it means we might be able to see a bullish move to break this level here, going up. Remember, price is still bullish, very, very bullish. Now, what if we are not able to see this kind of move? It means that still we might see a deeper correction. We might see a deeper correction on Euro USD, probably to this deeper demand level, then going up. So your work is just to watch how price react on this level and this level. If at all those levels are not able to hold, then it means that we might be able to see also this price coming all the way to this price point of 1.609 around this zone. So now if at all price is not able to hold, it means we can be able to get some short positions on the supply zones that will be created here. So if the price will continue with that downward momentum, it means for every pullback that the price will create, we'll have some supply zones. Therefore, you can be able to participate in the in these supply zones that price will be creating as it moves downwards. Okay. Yeah. Well. So you may be able to take your trades from this level and this level again. So the newly supply zones that will be created by the price. Now GBP USD. GBP USD, a similar case to Euro USD. Currently the price is overly overstretched. Let's have the 15 EMA and see what's happening on the price. From the forward price perspective, from the daily perspective, you can see price closed very bearish last month, or rather the last day of January, the last trading day of January. So price is currently reacting on a key might be approaching a key level of support at the moment. Moving down to the lower time frame, that is a 4-hour time frame, we have this point of interest as a demand area. This would be interesting to see price coming down to these levels here, but even before we get there is we have some minimal price reaction at this point on. So if at all I don't think actually this zone will be able to hold the price. So what I'm looking forward for GBP USD is still the bearish momentum to continue. So in this case, of course, you will have to wait for the break of this a mini structure, then look for look to go short until these levels on here. So once you get to this major demand zone, then this would be an ideal place where you'll be looking to take your buy positions from here to resume the upward movement on GBP USD. So this would be an area for you to be interested in GBP USD once we get to this location. Let's look at NZUSD. So NZUSD, similar case with the GBP USD. From the daily perspective, is that we had the daily, bearish engulfing pattern close. So moving to the lower time frame, there is let's look at where price would be reacting on this. So we have a demand zone on this level here. Then moving down to the lower time frame, that is the 4-hour time frame. This would be still some points where price might react. However, they will be not be so strong to hold the price. So looking at the NZUSD, we might have this kind of movement. Yes, before we proceed with an upward trend continuation. So this is it for NZUSD. So if you are able to capture any positions on the newly created supply zone as the price moves down, that would be fantastic. However, they might still be dangerous for you, since these zones will be counter trend against a very bullish market. So you have to be very careful while taking the counter trends. Let's look at USD JPY. So USD JPY, sorry. So from the daily perspective, this is what we have on USD JPY. So USD JPY, we were bullish for a very long time. This was a break of structure. This was a change of character on the daily time frame, because ideally this was swing lows, this was a swing high. Now therefore means that we should be looking for short positions. However, once we broke out of this level, price reacted in a minimalistic way before continuing down. So currently price is kind of pulling back to this structure over here. So I am not sure how the market is gonna open, so that we can see the reaction on this, because it's a valid. Is it valid really? No. I don't think this is a valid zone anymore, because price actually took out the fair value gap here. There's no imbalance. I was actually looking. Last week I was looking to trade on this zone, but there was no imbalance on this level to take a position. So now remember, we have this gap here that needs to be filled. So we might see price pushing up, and actually the only place that the price might see a reaction is from this supply zone over here. So for USD JPY, we might be making that pullback until the extreme supply zone. Then we'll be looking for shots from this level here. So of course we might have a pullback before you get to this place, then something like that. So this is USD JPY. So this should be your point of interest. So looking at the lower time frame, for instance the 4-hour time frame, is that now from the understanding of price, this could be your what? This could be your change of character that is forming right now. So because this was the last break of structure here. So we had the last break of structure there. Therefore, it means that if at all the market breaks beyond this level here, then it means this change of character will be valid. Therefore, we might be able to look for a mini demand zone on the lower time frame, maybe M15, to take this price to higher levels before we can look for shorts. So that is my perspective on USD JPY. But the most interesting point would be seeing prices getting onto this 4-hour supply zone before you can start going short. USD card. USD card. Now, quite a bearish market, similar to USD JPY. So this would be your ideal price to go short. So if at all the current, which I don't think is gonna hold actually. Now looking at the 4-hour time frame, we have this fair value gap over here. This is an FVG, so price might and actually what I'm seeing is that we've already done a change of character from this point on here. Because this was the last break of structure. We had another break of structure here. Break of structure. We had another break of structure here. So we can even either way, I think this would be the last. This would be the change of character here, and that has already happened. Now we have also another FVG over here, down here. So, and a mini order block here, a demand zone. So if you're looking to take a counter trend move for USD CAD before we get to the next supply zone, I think this would be an ideal point to get your buy position. Once we have this kind of structure on the lower time frame, then you can get your position here. Stop loss, you can actually keep it below the swing if you don't mind the stop loss. But if you are a more conservative, then it would mean you'd have probably maybe a 30 pip stop loss targeting to take a price. I don't recommend you to exit our risk reward ratio of 1:3. So you'll be looking to take a price onto that level, probably as you wait for for price to get onto this point of interest, which is a 4-hour supply zone, before we can look for shorts, because the market is still in a valid downward trend or movement. Let's look at the USD CHF. USD CHF. So a very bearish market, as you can see from the daily time frame. So this was the last vigorous break of structure going down. Looking at where the price is and how price closed last week, or the last daily candle of January, you can see price closed very bullish. So I am anticipating a pullback on USD CHF before we continue with the downward movement. So if at all price is able to pull back to these to the premium levels, then you should be looking to go short. Personally, I usually look at 61.8 to 70. This is usually my ideal fib zone that I might be looking to go short. So now that you have that bias, means you can go down to the 4-hour time frame and start looking for reasons to buy. Now, if this would be a good supply, an immediate supply zone, price point that the price might face some objection. So, but I don't think this with the upward momentum, I don't think this zone might hold price to go down. I think price needs to do a deeper correction. However, I've already said that our work is not to predict the market. Our work is to see what the market is doing, then we react accordingly. So if at all that level doesn't hold, then we also have this level over here. This is a good another valid supply zone over here. So that would also be a good point to look for shots on USD CHF. So yeah. So you would be looking for a retracement into this zone. Look for price turning inside out, then you'll be looking to take your shots from that particular point. Then the last pair that I'll be looking at is GBP JPY. GBP JPY from the higher time frame, price was very bullish from the daily time frame. Now at some point we had, now let me mark what was happening on this pair so that we can understand where price is heading to. So that is our break of structure. Price did a sweep of liquidity on this level here. This was a sweep of liquidity. Then it means this was the last higher low which was broken. That is when we have our change of character. And anytime we have a change of character, then it means we are no longer looking for bullish moves, we are looking for reasons to go short. Therefore, it means our point of interest would be probably here. This is where you'll be looking to go short on GBP JPY. If price is able to pull back to this level, I'll be a happy person, because I know this is my signature setup. So once price gets to this zone, I'll be going down to the lower time frame and checking for this kind of a setup. So usually like that. So, and I will be targeting these lows over here. These lows would be my target. So I'll be looking, let me just map it out, because these are signature model that I like to use so much. So on these lower time frame, the ones that you see on blue should be the lower time frame. So there is a break of structure, another break of structure, and now the last swing low that led to a break of structure, once it's broken, that is what we call the change of character. So once we have this change of character here, like an evident change of character, then we don't short on this breakout here. We again wait for price to pull back to the newly formed supply zone on the lower time frame, which would be on this structure here. Or you can actually take your fib from this point here to this point and look to short either on the 50, 61.8, maybe on the premium side above the 50% Fibonacci level. So once price gets to that price point, then that would be a place to place your position. Stop loss just above this swing. Then of course you'll be looking to swing market onto the next swing level here, which is the opposite liquidity. So this would be a 1:9 risk reward ratio trade. However, you may actually give your trade some room, so that you can, so that maybe 50, because this is GBP JPY. So, but this is a signature setup that I would be looking for on GBP JPY. So that is it for the weekly market analysis, guys. I'm hoping that you will be watching for these markets. Make sure to join my Telegram community, because I'll be giving updates on when I'll be making entries, or when we have these trades maturing. So other than that, thank you for watching this video. See you on the next one. Make sure to subscribe, like, and comment.